Good morning, I'm Clinton Griffiths. Happening right now, Congress is getting input on a new farm bill that will be written next year. Ag Day's Michelle Rook looks at some farm group priorities that are surfacing and how those get balanced with the current economic climate.
Clinton, House and Senate Ag Committee members have a tough job ahead of them writing the 2023 Farm Bill. They'll have to balance Republican plans to cut federal spending with desires from farm groups pitching proposals to raise reference prices for commodities, which would require more funds for the Farm Bill's safety net. Who controls Congress may dictate the tone of the next Farm Bill. If led by Republicans, it's expected to look similar to the past two bills with slight tweaks. Under Democratic control, the focus may be on climate, but the big debate will be funding, especially with high commodity prices.
Writing a farm bill when the prices are good is a little difficult also. A lot of legislators see that there's quite a little money in farming right now. However, our inputs and so forth are high, so it's an easy argument to say, we're not protected quite yet in that part of the farm bill.
A Republican study committee proposed a budget plan to slash federal programs, including Farm Bill commodity and conservation programs, even crop insurance. Washington lobbyist Mary Kate Thatcher says they're eyeing the deficit.
One of the toughest things is that you get a lot of farm groups that are saying, yep, we're going to go ask for more money, and therefore they are setting their priorities on having new money. Well, what happens if there is no more new money? Then you have to ratchet back everything you've asked for. So at the moment, it's a bit of a mess.
It's unclear if the baseline will be helped by the $19.5 billion for conservation in the Inflation Reduction Act. And groups like the American Soybean Association want base acre updates and a higher reference price on soybeans, although they haven't set that level.
It needs to be higher than where it's at. I mean, it just does not support us in the ag area, and it hasn't. I mean, we've really never dipped into the farm program on the soybean side because of the reference price.
And in an unprecedented move, even cattlemen are coming to the table asking for enhancements to the livestock revenue protection program, so it provides the same level of risk management crop insurance does.
It really will help the average cow-calf operator because the numbers, you can have one cow or you can have a large number of animals and be eligible now. If we can get into a level where we can use that to protect the producer from some of these difficult markets where we maybe can't get into the market timely for the cattle, it really could be an effective tool.
And when it comes to crop insurance, it's one area of the Farm Bill that continues to have consensus from farm groups and lawmakers, regardless of party. So Thatcher's confident about preserving it as is and without caps directed at large farmers.
If I was thinking optimistically about one program in the Farm Bill right now, I'd feel really good about where crop insurance is, because I think people recognize it's a pretty important safety net.
But the House and Senate Agriculture Committees have held very few field hearings yet on the Farm Bill, so it's still early in the process, and the political landscape may also change after November.